2015. Let's quickly go around the room, introduce ourselves for the record.
Good morning, everyone. Rosemary DeBellis, designee Police Commissioner Bratton.
Harry Dennis, SIS, consultant to the fund.
Joe Alejandro, designee for Patrick Lynch. John Puglisi, Mubarak Abdul-Jabbar, and the proxy for Alice Yerno.
Chris McGrath, PVA by invitation.
Vincent Valley-Long, SBA, designee for Ed Mullins.
Lou Turco, LBA.
Roy Richter, CEA.
Michael Palladino, DEA.
Neil Messing, Office of the Comptroller.
John Mercerberg, Comptroller's Office by invitation.
Wesley Pulisic, Controller's Office by invitation.
Scott Evans, Controller's Office by invitation.
Susanna Vickers, Controller's Designee.
John Adler, designee of Mayor Bill de Blasio.
Tony Rodriguez, designee of Finance Commissioner Jackie Hunt.
Bob Senskisted, Pension Fund by invitation.
Kevin Holleran, Pension Fund by invitation.
Nicole Jambrisi, Police Pension Fund, present by invitation.
Okay, Scott?
Okay, thanks very much. If everyone will turn to the flip book, monthly flip book for February, page 37. We can see that it was an up month in February. The markets have been going up and down as we're in this environment where we're at the end of the easing by the Federal Reserve, looking for the economy to pick up enough steam to sustain the markets, and they were up during the month, 2.92% for the police fund, and versus a policy benchmark at 2.91%. You can see if you look up to the top bar, the domestic equity led the way at almost 6%, where the developed market was also up 5%, and emerging markets a little less so. So led by the U.S. equity markets, we also had an up month in some of the bond areas, enhanced yield, bank loans, etc. So the environment has not changed a lot. If you turn to page 30, you can see our position relative to the benchmark. We're going to stay in this position for some time until long-term rates resume sort of normal returns, and we get paid to hold bonds for long periods of time. We get paid for that duration risk. We're flat, or roughly flat, on the equity side on the left hand of the page, near zero. We rebalance every month to try to keep it at zero. We allow the long-term bonds in blue and purple to go underweight, and we take the extra and put it in short-term bonds. As we've discussed with you before, we try to keep the overall duration or interest rate sensitivity about equal to the overall U.S. fixed income market as measured by the Barclays aggregate, and this position affects that. I'm not going to go into a lot of detail. Martin is out this week, and we've got a lot of stuff on the agenda. As you flip through the economic slides, you can flipping through them from capacity utilization to unemployment claims, et cetera, retail sales, auto sales. Everything's dipping down a little bit. And recently, the employment numbers came out. They're a little soft. So there's general concern that it's a little cold. Other numbers come out, and people are worried that it's a little hot. What are we looking for? We're looking for the economy and the business climate to be growing just fast enough so that the Federal Reserve can end its stimulative policy and return interest rates to their normal levels. And when we do that, we'll be at a more stable condition. And so we're actually rooting for things to be strong enough for the Federal Reserve to be able to do that. But as they do that, if they do it in a way that surprises the market, asset values, which are at very aggressive levels, will go down. So we're having this up and down pattern throughout the months that we expect to continue until the Federal Reserve is able to engineer a return to normal interest rates and normal interest rate spreads. That's kind of the bottom line on the macro picture. I mean, we could go through and show that the dollar's high, that interest rates are at record low levels, but you all have seen that. Why don't I stop, and I can take any questions that you have. But you know, a decent month. We're on the way to a pretty flat year for the fiscal year, and we can get on to the issues at hand, which are to evaluate managers and asset classes. Any questions about February? Okay. With that, why don't we move on to the next public item we have, which I believe is the diversity proposal. And this is something that I've been doing at all the board meetings. Some boards may want to take action with regard to their procurement, and some boards may just want to consider what we're doing in the Controller's Office with regard to diversity. So let me just give you a quick look at what we're doing, and you can decide whether you want to think about it and raise it again in a while or take action today. So, turning to page 72, we are taking a look at our diversity policies. We're developing and evaluating diversity of perspective in existing managers across all asset classes. We're trying to recognize managers with strong diversity profiles, and we're trying to integrate diversity into consultant searches and management selection. This will promote consideration of diversity in decision-making by institutional investors and in management evaluation. The first two pieces of this, evaluating diversity and recognizing managers with strong diversity profiles, is something that the Controller's Office may do, you know, as it goes around the country talking about the portfolios that we have and recognizing the diversity that's within it. The second piece, integrating it into consultant searches and management selection, that's something the Controller is one of 58 making the decisions, and each board can act independently as to whether or not you want to embed this way we're looking at things into the consultant searches and management selection. That is your choice, not ours. So first of all, let me talk about why do we care about this? You know, is it some social concern? Is political concern? What is it that drives us to even think about diversity? And I am your Chief Investment Officer. I'm going to talk about it from a financial perspective. Why is diversity important to the returns of our pensioners? And quite simply, diversity is positively correlated with stronger financial performance, lower volatility, and lower risk. It's shown to prevent groupthink and improve decision making. If you have a diverse group of people, various studies have shown, and I'll take you through some of them, that a diverse group will be less subject to groupthink than a homogeneous group. It doesn't matter what group is homogeneous, just if everybody's the same, looks the same, comes from the same background, has the same approach, cultural norms, etc. If everybody thinks the same, they're more likely to make errors in their judgment as a group. If they're diverse, they come from different backgrounds, different perspectives. Studies have shown that they are less inclined to that. So this is one of the most important things in investment decision making, is that groups of people are making buy and sell decisions in the market, investment committees for the most part, and it's important that they not be carried off to sea by homogeneous thinking. And if we look at some of the studies, the National Academy of Science put out a study this year where they studied in a controlled setting, this is on the next page, racially and ethnically diverse traders. And those groups had a 58% greater ability to capture pricing and truly value stocks than homogeneous groups. McKinsey did a broader study of racial and ethnic diversity across corporations, found that diverse companies were more likely to create higher returns. Credit Suisse did a study. There are many, many studies. The prospect that diverse groups are associated with better decisions is a matter of science. And it's from that perspective that we're interested in diversity. So when we go and look at a management team, we have one and only one thing that we're looking for. Are these guys going to make us money? Are they going to make us more money than other managers? Are they going to make more money than the benchmark? And we look for a strong decision-making process, a consistent decision-making process. We look for a strong track record. We look for a team that is diverse, where there are a broad set of perspectives around the table, where there's a succession plan in place. We like to look at teams under stress to see if they're sticking to their guns. And so diversity is just one of those things. It's not something you look at all by itself. It's one of those things. It's a symptom of success, a symptom of a firm that's well managed, well structured. So we think that it should be one of the things that we formally look for when we look for good managers in the procurement process. But we will, at a minimum, begin to talk about diversity in a way, and I'm on page 77 now, that that we recognize diversity when we see it, not only in small firms, not only in firms that are more than half owned by minorities and women, but we'll seek it in the general population of managers as well. We have a homogeneity problem in the investment management business. If you look in the previous page, 80% of portfolio managers, 83% in the industry are white. Senior portfolio managers, 82% are male. Senior portfolio managers, 90% white. And hedge funds, 97% white male. So it's nothing that, it's not that I have anything against white males. I happen to be one. But there are too many of us, and we have a homogeneous, outlook in the industry. And to get diversity, racial and ethnic diversity, is really, really difficult. So you would think, given this science that I talked about, and given the homogeneousness of the industry, that the asset management business would be one of the first industries to take this up, but they're not. And we want to recognize those that have and those that get it, whether they're small, whether they're minority owned or not. And so we're going to try to expand our definition of a diverse firm to include firms of any size, and evaluate the firms based on the decision-making teams that manage our assets. So we'll look not only at racial and ethnic diversity at the board level, but we'll also look at the investment decision-making team. What's the representation on the investment decision-making team across the company? And then how are they paid? So if you have a decision-making team that looks like the United Nations, but the two white males on the decision-making team make 90% of the money, you don't have a diverse decision-making team, because those folks are likely going to, have many, many votes related to the other folks. The investment business, like many businesses, the dollars talk much larger than the representation. So we want to look at all three of these things. We will look at this, and we will call out the managers that are creating diversity. Right now, when we go around the country, we talk very proudly of the fact that we have $11 billion, 6.7% of the portfolio, with emerging managers who are MWBEs. So that this is the MWB content. These are firms that are 51% owned by minorities. What we plan to do in the future is to talk about the percent of the portfolio and the dollars that are with MWBEs and diverse managers defined as I just did. So that's what the controller plans to do, and I'll do it as well. What we would like you to consider, and you don't have to do anything at all today, we'd like you to consider having this process that we use to determine diversity in the managers as part of the evaluation process that we use for procurement. Not as a quota, not with any fixed scores, but as part of the mosaic of looking for good management teams. So why don't I stop there, And you guys can decide whether you want to just think about this or talk about it.
You're going to require like these private firms to fill out a census as to what the ethnic and gender makeup is of their staff?
So if you were to formally adopt this, as other boards have already, New York City boards, when we go to hire managers, one of the pieces of information we'd ask for, just like we ask for track record, is we'd ask for the representation of various groups at the board level, at the investment decision-making level, the investment professional level, and then the pay of the investment professionals. Not any person-specific pay, but the representation of pay, the percent. So if you look at white males, what percent of the board are white males, what percent of the investment professionals are white males, and what percent of compensation on the investment team goes to white males. And so that's the process that we will be using at other boards. It's optional. I mean, it's your process for the police fund, and you don't have to make the decision now. I've only so far talked to one board. I'll talk to all 5 of them as I go around. And that second piece is completely optional and up to your board, not up to the controller's office.
And is other funds like Nationwide that have done this?
There are some funds. I think this is if you believe in diversity and believe that it ought to be a formal part of the process, I think you would consider what we're proposing here to be progressive, sort of a little ahead of the curve. But there are others out there that do this. I think Connecticut is one. I believe Illinois is one, so I think it's. We would not be the first to ask for some information, but we do it in a very focused way and in a way that's directly related to what we think is an indication of strength and likelihood of good decisions being made by the team.
Would any of those funds that have begun a program like this have any tangible results that we can review to see performance enhancement or diminishment, whichever way it went, that we can take a look at over the next month or so?
That's a good idea, Jim.
And the second piece, I could see in a program like this necessarily if something was, there could be some gamesmanship in a program like this. So I want to make sure that we're not creating, if we were to go down this road, a program where tokenism was created and things of that nature. And I just have concerns where you could at least show where the pitfalls could be, and that the trustees, if they decide to adopt something like this, what to be aware of. And the third piece, is there a way, do we have to require the managers to participate in something like this? If we have a good manager, and obviously the idea is we're not getting rid of white influence in any of the, in the boards, whatever. What it should be is a mix, and so I want to make sure that, is it a requirement? How is it our requirement kind of helping or hurting us? Maybe I don't have the question formulated correct, but I have a concern about what we're doing here. Because remember, at the end of the day, we would be open to criticism as a board that we're going down a road that maybe is not best for the beneficiaries of the fund.
No. Well, look, if we were going down a road that wasn't the best for the beneficiaries, I wouldn't be making the proposal, right? Because everything I do has to be just like I know everything you do, and any fiduciary does, has to be in the best interest of the participants. And so that's the lens that I put it through. Whether the folks that are using this type of information can prove, a bump in performance, let us come back to you. I think it's a good question. You mentioned what you referred to as tokenism. Basically, you have a team that you want to. You've been asked for it to look a certain way, right? So it wouldn't naturally look that way. So you have a few people on the team that really don't have much involvement, so that things look good. firms have been accused of doing that when they come to present to us. This is why I have the compensation filter on there, because investment firms will do a lot of things to get business. They won't screw around with the compensation structure. If you mess with the compensation structure in an investment firm, you're messing with the very fundamentals that make the place work. And so that would just not work. It might work on one little team, but it's not going to work across the group of investment professionals. I actually started thinking we should just look at the teams that are working for New York City, and I've been convinced that would be a problem for the reasons that you mentioned. So that's the specific reason that the investment compensation is in there, so you don't have that factor. So we'll look at these things. We can come back to you. This is completely optional on your part to bring it into the formal part of the procurement process. But we will, to get back to a question was asked earlier, in other systems, be making it a requirement for managers to disclose this kind of information before they're considered, as they come up for contract.
Now, Scott, controller's office isn't losing sight of the focus has to be performance.
Absolutely.
Right.
Okay.
Yeah.
But, I mean, that's what it's all
No,
about.
Scott,
Mike,
do you want to go through how this is just one factor, and
Right.
it doesn't have a score?
Yeah, so I did already, but I'll go back over it. Just like we wouldn't only invest with firms that had, the top 10% performance over the last 10 years, right? Because there may be many good reasons why a firm we think will be in the top 10% next year, but it didn't have to happen to be, looking backwards. But it's an indicator. If you've done well in the past, it's an indicator about your ability to do well in the future. If you have no succession plan, if one person is running the fund, there's no obvious successor, and the person running the fund is in their late 80s and in poor health, we would be concerned about that. By itself, is this a reason to eliminate? No. Berkshire Hathaway has somebody that's in their 80s that the succession plan is a little unclear, but there's good reasons to invest in it. So these are diversity is like that. It's one of the things that by itself we consider to be a positive attribute, but in no way, shape, or form would it dominate the others. There's no specific score attached to it, no specific weight attached to it. There will be a score, so we can measure one versus the other. So yeah, nothing changes about why we select managers. We would just be adding this as a factor that we evaluate, and we can only do that when we look across the size of firms. We can't say this is only relevant for small firms. It's only relevant for firms that are, majority owned by people of color and women. So we have to look at this across. Otherwise, we mess up our ability to look at it as a true factor. But I do believe it's a positive factor.
So why don't we get that information,
Sure.
and then we can review it, and then we'll have another sit down
Yeah.
to discuss
Okay.
how to flesh it out, because always the devil will always be in
Sure.
the details.
Right.
So I
Terrific.
just table it until next
Yeah,
week.
absolutely. No problem at all. Okay, that concludes, Madam Chair, our public session items.
So I make a motion that we leave public session and go into executive